Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of the hosts for today. We've got a fantastic program today. We greatly appreciate being with you. We always learn a lot. So let me first just cover some housekeeping items. You can earn CPE. You've got this toolbar at the bottom and at the end of the session, you can click on the CPE button and get your CPE certificate. All you need to do is to click on the pop-ups throughout the session, and please do disable any pop-up blockers you may have. This is a modern platform. Please do adjust your volume. You can also adjust the screen size for the video and for the PowerPoint presentation. And you also can download the materials with that orange button. Download today's PowerPoint presentation, our frequently asked questions, and there's other materials there as well. So now let me introduce today's presenters. First off, I'm Eric Auskerson. I'm the president and CEO of CPA.com, AICPA's business and technology subsidiary. With us today is a special guest, Greg Anton, a former AICPA chair, also was CEO of ACM, which merged in with BDO I think it was last month. Greg is going to be commenting on ACM's perspective related to the PPP business relief phase that we've all been living over the past many months. And ACM is based out of Denver, Colorado. With me from the AICPA are Sue Coffey, who leads the public practice area. Welcome, Sue. Dan Knoll, who is the accounting expert at the AICPA, and Dan's going to be sharing with you the AICPA's perspective related to accounting treatment on PPP loans as well as other matters. And finally, we've got Lisa Simpson. You all know Lisa. Lisa and her team have been putting together all of the resources related to the PPP program over the past many months. So here's the agenda. We're going to, as usual, start off just with some broad strategy comments related to what firms are doing, a policy update. Then Lisa's going to take you through a number of good examples related to the latest PPP guidance. She's also going to share some new information with you. Sue Coffey and Dan Knoll are then going to do a accounting issues review with us. We then will have an in-depth discussion with Greg giving us his perspective related to this business relief phase that we're all living through. And then I will also be talking a little bit about the .CPA launch. So first, Lisa, why don't you just do a quick recap of some of our recent AICPA Town Hall series.
Thanks, Eric, and welcome back, everyone. As you'll see, we try to highlight some of the topics just in case you missed one of our sessions, or if you want to go back and watch the replay, you can kind of target in. So last week we did a brief discussion about accounting for PPP lenders. Dan, as I mentioned, is going to talk a little bit more about that. We also had a conversation around the payroll tax deferral. If you are still having some questions about that, I'd refer you to the August 20th town hall where we did an in-depth conversation with Ed Carl, our VP of taxation, around that topic. August 27th, we had our special edition with Todd Young, and we talked about the cash and non-cash limits on compensation again, one of everyone's favorite topics. But you got your list there and the links so that you can go back and review the ones that you need to refresh on. This is our list of most common frequently asked questions. So before you submit those to my amazing team working in the background to try to answer, take a look at these FAQs to see if we've already covered it in the document that you have available as a resource to download. On the next slide, we want to talk about just a couple of the tax questions that we've talked about before. So currently, expenses paid with PPP funds are not deductible for an income tax standpoint, but we are still actively pushing that as a legislative priority. It's a measure that has bipartisan support, but it needs the right legislative vehicle. We're not sure if that's going to pass before the election or after the election, but just rest assured that we are still advocating for that, looking for the right vehicle. We also get lots of questions about what to do if the client needs to go ahead and file a tax return. Should they deduct those expenses and apply for their forgiveness, or how does all of that work? There are several options to review with your clients. And again, I'll refer you to that August 20th conversation with Ed Carl. He gives you a lot of great ideas to think about as you're positioning the conversation with your client. We do have a couple of recurring questions that we're still waiting on some guidance for. The first one is on FTE reductions. If a borrower has spent all of their money, let's say at week 12 or week 14, and they want to go ahead and apply for forgiveness, what happens to the FTE reduction calculation? We have asked that question several times. We are getting some insights into it and hope to be able to get back with you pretty quickly on what we're hearing through our channels. We also had a conversation with our Treasury official last week, and one of the questions we asked was about related party rules for rent. There was an August 24th IFR that came out, and a question that we had as we were working through it is, are there owner attribution rules? They're processing it, and we may be getting some additional information in the coming week.
Well, thanks, Lisa, and your team's done a great job answering a lot of those questions. We have close to 5,000 attendees on these webinars, so if you could take a look at those FAQs before you submit questions, but please do submit questions because we leverage your questions to develop future FAQs. So when we take a look at what's happening in the marketplace, we were looking at this slide in the early stages as sequences. We were like saying you had ongoing shutdown, and then you moved to the business relief activities, and we're going to be moving into this business model review this fall. But what has really occurred is there's all three of these different activities are continuing to occur. And I'm going to be bringing Greg Anton in to comment on this, but you still have ongoing shutdowns of businesses. You have ongoing business relief activities occurring where there's focus on what's going to happen with the next phase of PPP2. I'm going to be talking about that in a moment. A lot of effort is going into the forgiveness process. We'll talk about where that stands. I'll just tell you at a very high level, under 100,000 businesses have submitted forgiveness applications into the SBA at this point. So most businesses are still working with their advisors on doing the forgiveness application, understanding it, and many of the banks have not even fully stood up their forgiveness platforms. And then this has been such a defining time for the firms playing the trusted advisor role. We heard last week from Dixie McCurley how she's really working on cash flow forecasts, business model adjustments, and just overall business planning with their clients. So I want to ask Greg Anton just to give us his perspective. I mean, Greg, I remember back in early April, you and I were talking a couple of times a week. We were always reaching out to firms, understanding what was going on with the firm. Your firm has been so active. You really thought through how to operate in this environment, and I think you've got some interesting perspective on what firms should be doing from a business relief strategy standpoint. So Greg, let me just ask you to comment broadly on what the last 6 months has been like for you and your firm.
Thanks, Eric, and welcome everybody. I think when we initially went into this pandemic, our focus was how can we, our firm, for our people and our clients, come out of this stronger than we went into it. And we tried to outline ways that our firm could create activities around supporting how can we come out of this stronger than we went into it. And it became really clear as the PPP legislation began to be enacted that we could participate with the AICPA and our elected leaders in influencing some of the activities of what was going to actually be in this legislation. If we fast forward post legislation coming out, we worked diligently to stand up a business unit, a practice unit with dedicated resources to support every client, every non-client, and all the stakeholders in the communities that we serve with resources to access business relief funding, whether it was EIDL loans or PPP loans, whatever we could do to help those businesses that needed it get it. And I will tell you that a significant number of the businesses that we supported were non-clients throughout that entire process. We also participated, I was on the governor's COVID relief task force for business, and we stood up in our state a call center for businesses to call to ask their loans or ask their questions related to PPP loans and EIDL loans and others. We were responsive to those, and we continue to man that help desk and respond to those questions. And I think I'll end with this. As many activities as there were in trying to get access to business relief, the real work starts now. The real work starts in how now do we either access future PPP2 other funds, and when and if they become available, planning for that. And then even more importantly, how do we help support the forgiveness application process? That's where the real work's going to be for the firms to participate in helping clients and non-clients through that process.
Well, Greg, thanks. I look forward to coming back to you in the practitioners discussion. But one thing you and I were talking about just before we got on was it's not too late. I mean, even if you did not do all of these activities that you just mentioned, the next 6 months, the next year, you still could reach out to your communities, make it a defining time. I think many firms have made it a defining time, but if you have not, no better time than now to start.
Agreed.
So thanks, Greg. We always highlight, what is being discussed in the media or with some of our partners, and what is being discussed is business relief. There is tremendous pressure for some type of action with our leaders in Washington, D.C. And this past week, the Problem Solvers, it's a caucus in the House of Representatives made up of 25 Democrats and 25 Republicans. They proposed a $1.5 trillion bipartisan relief plan. This is basically in between the HEALS Act that was sponsored by the Republicans in the Senate and the HEROES Act, which was sponsored by the Democrats in the House. So there are a lot of people looking to try to find a solution. And we're going to talk a little bit more about PPP2 in a minute. We're also connecting with our banking community on a regular basis. And we are seeing many banks, and here's a highlight of an Ohio bank, Huntington, which are stating that they're only taking forgiveness loans at above the $150,000 level, because there's still a lot of discussion that there'll be automatic forgiveness below that level. So, and this bank actually isn't standing up their platform until September 21st. So many banks are standing up their platforms in mid to late September, and many are just going to be focusing on the larger loans. And here's an article regarding the Main Street program. The SEC blessed some accounting treatment related to the Main Street programs, and I'm going to let Dan Knoll comment on that in a little bit. But when you look at what's happening in Washington, D.C., when we look at PPP Phase 1, as I stated earlier, very few applications are being processed. And the reason why, there's two drivers. Businesses are waiting on the simplified forgiveness, that automatic forgiveness, and they're waiting on clarity about the deductibility of PPP funds if the loan is forgiven. As Lisa just mentioned, there is a lot of bipartisan support for that. That most likely is going to be a post-election type of activity. We think there's a chance for a PPP2 action, some type of bill or vehicle to get some approval around that. prior to the election. We actually are going to be issuing a statement later today. We very much support more business relief for the small business community. We're all seeing the reports of a slowdown related to the restart of many of these small businesses. These small businesses are hurting. Some of these small businesses are going to be permanently shut if we don't get additional business relief to them. There's 130 billion plus still available in PPP1. So at a minimum, we think that funding should be made available for a second loan. So we're hopeful, just like Senator Young was optimistic a few weeks ago on our town hall, that something will happen in the coming weeks. We encourage all of you to reach out to your senator, to your representative, to retweet the statement we're going to be putting out later today to put the pressure on our elected officials to get some type of PPP2 bill passed. So with that, Lisa, I'm going to turn it over to you for a quick tax update before you go into the broader review of the latest guidance.
Thank you, Eric. We'll do a quick tax update and a big shout out to Ed Carl, our VP of Tax, who will be joining us in a future town hall to go into some of these if you have additional questions. But we just want to start by acknowledging that this has been an incredibly stressful year for those of you who are in public accounting and for those of you actively trying to navigate your business through this crisis. If as a firm practitioner, you've had trouble meeting those filing deadlines, so for example, the September 15 deadline, because you were helping your clients with PPP applications or forgiveness, or maybe they had COVID, or maybe your firm was impacted, the IRS does seem to be willing to work with taxpayers and practitioners who are looking for filing and payment penalty relief. I've provided you a link to a Journal of Accountancy article there. But basically, we're continuing to have conversations. We're continuing to push for as much leniency as possible. A suggestion is that you work with your software provider to include a note at the top of the filings that say COVID-19, and you'll see additional details in that Journal of Accountancy article. So would please encourage you to check that out. And because the week wasn't stressful enough, we had a large provider with a September 15 outage. We quickly contacted the IRS and they do understand the situation. Our recommendation currently is simply to file as quickly as possible. I've gotten some questions in the chat about potential late elections that couldn't get made because the return couldn't be e-filed on September 15. Please go ahead and just get that return filed. Another issue that is impacting a lot of tax providers or a lot of tax practitioners is around the continuing natural disasters. We are continuing to encourage the IRS to collaborate with FEMA so that disaster guidance comes out quickly. Another big topic that we're hearing from our members is that clients are calling them and saying, my tax payment that I sent back in March or May or July hasn't cleared yet. I think I'm going to cancel the check. Please encourage your clients to not cancel those checks. The IRS has a huge backlog that they are trying to process. I know y'all get tired of hearing me say the word patience, but you're going to need a little patience and counsel your clients just to use some patience so that backlog can be cleared up. Do not cancel the check and send in another one, because that could generate some late payment notice. And maybe there's a bingo card for every time I say the word patience on a town hall. Y'all are out there taking drinks. I don't. But let's move into PPP stuff. I wanted to, again, hit compensation limits because I think this is a point that where people are still struggling with a little bit. So in August 24th, IFR, we got some clarification that an owner employee is a 5% or more ownership, not just anyone who is an owner and also an employee. So good clarification there. I've given you the payroll caps down there at the bottom for both non-owner and owner employees based on the covered period. And then we'll dive back into a couple of examples. On the next slide, I brought back the Brady family from last time, but I've made a couple of changes. There were way too many kids on the slide, so I got rid of a couple of them. So hopefully that helps you with reading the slide. But I also added an important step, and kudos to Bob from Meadsville, Pennsylvania, who corrected me. I did not include the owner-employee prorated comp limitation. So I've added that column. And also a little bit of clarification. We got lots of questions last time about family ownership attribution rules. We have confirmed with our person at Treasury that they do not expect owner attribution rules to apply when it comes to this particular compensation rule. I know there are other attribution rules for non-cash compensation, but in this scenario, this is what we have been told. So I put our caveat of per our current understanding. So you can go through the examples there, and you'll see that I've shaded the pink lines are your owner employees because they have 5% or more. So they're going to be subject to their maximum compensation for forgiveness is limited to the lesser of the prorated portion of 2019 or those owner-employee compensation maxes that I showed you on the previous page. Then I gave you an example of Greg, really quickly, I promise. Greg got a big raise, but that because he's not an owner, it doesn't count against him. So he's only limited based on an employee status. And then similar situation for Bobby. So if we scoot over to the next slide, I wanted to give you an example of the Brady family spent all of their money in 12 weeks, and they wanted to go ahead and apply for forgiveness early. So it is our understanding, based on our conversations with Treasury, that the compensation limits are prorated so that if a borrower is applying at 12 weeks, the maximum compensation that they can be eligible for forgiveness is half of that compensation limit. So what does that mean? If it's an owner employee, it is $20,833 divided by the 24 weeks multiplied by the number of weeks that they're using in their covered period. So in this instance, it's 12 weeks. If it's a non-owner employee, then it's $46,154 divided by those 24 weeks times the number of weeks they're using to get to $23,077. So I've given you the calculations there. I think it's really important, and Greg, I think, is going to talk about this a little bit later, but if you look at this example, the company spent $133,000 on compensation. $83,000 is what's eligible for forgiveness. So you've got to make sure that as you're working with your clients or as you're planning out your eligibility spend, you've got to factor in those compensation limits. I also wanted to briefly go through a reminder on related party rent. The August 24th IFR said that basically the amount of rent depends on, if you're paying it to a related party, depends on whether or not the related party has a mortgage on that building or that property and what the interest is that they're incurring. So if we go through the next example, we've got another sitcom family, and we've got a CPA firm who is renting from a real estate company that has ownership shared between the wife and the husband owns part of the firm. So if Johnson CPAs is paying $5,000 a month in rent and they had a legitimate agreement in place prior to 215, they're only going to be eligible for PPP forgiveness for the amount of $10,000, which is the amount of interest expense that RRE incurred during Johnson CPA's 24-week covered period. Sounds confusing, I understand. On the next slide, though, this is where we're still awaiting some guidance. So what if Andre did not own any of Rainbow Real Estate? Would this still be a related party transaction? What if the real estate was owned by a child not in the firm? So we're just waiting for a little bit more clarification on that one. When we went through this last time, I got lots of questions about, but what if there is no mortgage? If there is no mortgage on the property, then Johnson CPAs has no PPP eligible rent that they can deduct or that they can claim for forgiveness. Then we've got mortgage interest payments. These are mortgage interest payments to a related party. So those are not eligible for forgiveness according to the August 24th IFR. When we were talking with Treasury about both of these scenarios, their concern was that it could be a situation where there's double dipping. So what if Andre applied for a PPP loan and Rainbow Real Estate applied for a PPP loan? One family is getting 2 sets of PPP loans. So that was part of their rationale for some of these related party restrictions that they've presented in the IFRs. So here's an example. Again, it's very similar, except Johnson owns the building and is paying a related party the mortgage and the mortgage interest. In this scenario, there is no eligible mortgage interest for PPP forgiveness. Again, a lot to dissect there, but you've got the slides. Now I'm excited to turn it over to Sue Coffey and Dan so that they can talk about some of the accounting implications of this environment.
As Eric said, we have Dan Knoll with us today, and Dan is the leader of our financial reporting team and works very closely with a lot of important regulators, SEC banking regulators, and of course the FASB, to help define accounting policy and develop supporting guidance. And so Dan is the guy you want in your corner on everything accounting. So Dan, you and I have had a lot of conversations over the last several months about, the accounting treatment of PPP funds for both borrowers and lenders, the treatment of other COVID-related programs impacting financial institutions and healthcare entities, and just a myriad of other accounting issues related to the current environment, asset valuations, reserves, a number of things. We've also talked about the timing of the accounting. We've talked about the 8 and the 24 weeks as it relates to PPP, but very importantly, those period ends in between. So, maybe can you share with us your observations and learnings that you've had over the last couple of months, the challenges and the stresses that are in the system, and give us your take on the current environment, the appetite around, judgment and flexibility, and what you believe practitioners ought to know and what they should be doing from your perspective.
Sure thing. And I'm going to start so I don't forget. Eric mentioned Main Street lending program. So the SEC staff this week at our banking conference basically gave a great announcement. They took a potential hurdle or cost out of the financial reporting system. Basically, what they said is a lender does not have to go spend money on a legal opinion related to getting a true sale opinion. So that means a bank can actually have an incentive to participate in the Main Street lending program. So it really will stand on its own. There won't be a financial reporting type hurdle. So to your point, there's a few different things. What I've done is I bucketed this up into the first 2 bullets I want to bring up. And I could bring this up even in a garden variety recession, right? Because in our accounting and auditing world, judgments are increased, are more challenged. Impairment notions, same thing. In this environment is going concern. And I wanted to bring it up, as corny as it sounds. I just want people to know that you're not alone, right? You've got going concern considerations. Impairment specifically, I want to raise is it's the non-financial assets. It's things like goodwill. It's things like intangibles, property, plant, and equipment, other finite-lived assets, things that you normally are not necessarily going in saying, boy, I got to get in there and see if I've got an impairment situation. Well, there's a lot of stress in the system. And I just want you to know the best, and I do mean the best accounting and auditing minds in the country are struggling and are challenged as well. It's not a lack of standards. The standards are in place. The standards are clear. It's just the judgments that go into it. So again, you're not alone in that regard. Now, Sue, the other part that you bring up is really the next few bullets, which is, all right, there are times when standards do need to get fixed. And there are times when standard setters and regulators, like during this crisis, FASB's done something, GASB's done something, the SEC, the bank regulators, where they've had to step in and they've had to solve certain things as a result of the pandemic or as a result of government actions. Then there's other times that it falls to us, the profession. So if we move on to the next slide, I'll show you an example of some of the technical questions and answers that we just issued. Our focus here is on FASB GAAP, and it also applies in this case to non-governmental entities. So I'm not going to go through every one just to save time, but basically what you have is much like the government did the PPP program. You have what is somewhat common in the healthcare game, which is the government will throw money at healthcare entities, public policy reasons and all that. So to illustrate, the first one, the government had $50 million via the CARES Act, 50 billion, sorry, via the CARES Act, and they distributed it to healthcare entities. So really the question became, all right, we're kind of familiar with this in the healthcare world, but we want confirmation on how to account for this. So basically what we did is we put out a TQA that said, you're going to follow a grant accounting model. So I'm not going to get into all the details on that, but anybody in the healthcare industry is quite comfortable with the notion of what is a grant accounting model. And just to pick the second one as an example, also this notion of provider relief funds, this one was specifically targeted uninsured patients. So this is not a bucket of money grant type notion. This is one where it falls under the notion of a claims reimbursement model, which really means the way that a healthcare entity is going to account for it is more like a patient service revenue model. So that's something their models are very used to, they deal with it, et cetera. So you can see the other categories related to the healthcare TQAs that we issue. Let's go on to the next one. This one also industry specific. This is accounting by lenders related to the PPP program. This is a specific one. And recall that we did issue a few more back over the recent months. This is the latest one. We issued healthcare a couple of weeks ago. We issued this one a couple of weeks ago. And if you read this and you're underwhelmed, I can understand because it seems kind of obvious. It basically says that when a bank can take the loan off its books, the loan that came through the bank from the SBA to the bank and into the hands of the recipient, it's when the SBA basically cuts the check and gives the bank the money. So it sounds obvious, but there was actually a bank regulator who had a slightly different twist on this. So one of the things we routinely do is we make sure we get all people together so we do have a common understanding, and then people out there in practice just know what to do. So the next one is a little bit of old news. This is the PPP accounting for borrowers. There we go. So I'm not going to go through the details. You folks have probably heard about it. And if nothing else, we're all suffering from information overload. If you didn't know we issued these TQAs, now you know, you have the link to get them all. So basically, this was an accounting, again, for the borrowers. This one's pervasive. This cuts across lots of different industries. Could be anybody. And the notion is that the borrower could account for this as either some form of a liability or debt or within the grant model. And a grant model would also have it be that you'd start off recording it as liability, but then the way you recognize it a little different. So what I want to emphasize on this slide is that what's happened in practice is if it's important, if you're coming to a fiscal year end, you're a non-governmental entity, not public companies, because they have their hard and fast quarter ends. If you're coming to a fiscal year end somewhere and you know that you're going to have a liability on the books, whether it's a loan or some other form, if that bothers you, you have a better chance of getting that liability off the books earlier if you're under a grant model. Because if you're under a loan model, the reality is you can't take that loan off the books, that liability off the books, until the point that it's been forgiven. And so that's almost a legal release notion. So if that matters, but I want to make I think a more important point. Think about a typical private company, just to pick on them for a second. How important in the reality of a bank lender is that loan showing on the books? The lender knows you went and got the money. The lender knows there's a darn good chance that money is going to be forgiven. They know your business and you explain the business to them and the fact that, yeah, they're meeting all the criteria. You know that's going to go away, but it could trip up a debt covenant. So one key thing to do is to take advantage of the opportunity. If you're a company or an entity, get in there, meet with the lender. And by the way, if you had a great experience with the lender, thank them for everything they did to get the PPP loan in the first place. If you're a firm, maybe you go with the client and go and speak to the lender. We never miss an opportunity at the AICPA, whether it's some type of liability created via this, or when the leasing standard comes down the pike for private companies in the next year or so. That's an opportunity to get the face-to-face time with a lender, create the relationship. And as we know from PPP, the relationship is an important thing. Things went a lot smoother when people had the relationship with the bank or with the lender in the first place. Eric, I'll give it back to you.
Eric, before I pass it off to you, I just want to emphasize something that Dan said, and it's really the collaboration with the regulators and the FASB throughout the course of this. Dan does that. Dan and his team do that every day on every issue, and it is very important. The relationships are very important, and we work, just unbelievably well with all of them. And Eric has mentioned the work that we've done with SBA and Treasury, and just kind of bringing it home to all of the relationships and the ability to work together to find solutions for just the American economy as well as our profession is important. So thanks, Dan, for that.
Yeah, well, thanks, Dan and Sue. And I'll tell you, Dan, we're going to have you back because as we get closer to the end of the year, I see a lot of questions coming in on some of the strategies that you just outlined about, grant versus loan. So we will continue to discuss this. There's other questions coming in. I mean, about when you sit down, some of the lenders may want the borrower to put their forgiveness application in. Some borrowers may want to delay that. It's great advice about building that relationship with the lender. We do think this whole forgiveness process, the accounting process here, is going to give other opportunities for the firms to have that dialogue with the lenders. So thanks, Dan. We'll bring you back during open forum and see if there's further questions on all of this. So now we want to move into the discussion, a deeper discussion with Greg Anton, and really hear from him about his conversations with his clients. And so let's just kick it right off, Greg, get right into it. So how are you managing this forgiveness process with your clients? I know you've talked to us about how you put them in different categories, but I'll let you explain that to the audience.
Yeah, sure. Thanks, Eric. I think one of the things that's really important is, and this is something that you've heard from many today in the town hall, an element of patience. And some things to support that element of patience with communicating with clients, stakeholders, and others. We still don't know exactly ultimately what forgiveness is going to look like. And we continue to have modifications in the rules. Many of the modifications and/or interpretations have provided opportunities and benefits to the actual borrower. So the longer you wait, the more opportunity for benefits to the actual borrower there may be, like going from the 75% to 60% as an example in payroll spend. So we're really encouraging borrowers of PPP loans to wait. There are some specific nuances where we have, in very limited circumstances, seen the need to accelerate forgiveness. And that really has to do with M&A activity. In M&A activity, not to get into the details, but if you have a company that received a PPP loan and they're a target, they're being acquired, generally speaking, the acquirer has to assume that loan. And there are complications in doing that. And in some instances, we've seen acceleration and working with banks to try to accelerate forgiveness. Other than that, there's several million loans out there. And as Eric mentioned earlier, under 100,000 have actually gone for application.
So Greg, and Lisa,
Sure.
I want to have Lisa join into this discussion. So why don't we bring Lisa up? And Sue, what are you doing in the meantime? So you're saying just delay? Are you doing nothing? Are you, there we go. We don't need the slide. We got the 4 squares up. So, what type of work are you doing with your clients as you say, let's just be patient?
Sure. So what we're doing is we're helping them accumulate all of the information and manage the activities of the spend from a cash flow standpoint to see that they're going to get full forgiveness. And I think one of the things that's really critical is staying on top of all of the nuances that are changing. When Lisa went through the rent spend and the interest spend and the pro rata spend for employee owners, every one of those nuances needs to be rolled back into your spend evaluation model to get full forgiveness. So maintaining the forgiveness model and then modifying it for the nuances of change until the actual forgiveness happens. All the support, the invoices, the documentation, be ready, be prepared for it, and help the company get in a position for that forgiveness application.
Greg, I'm curious about the work you're doing with your clients related to, new business models. And is that, at the same time you're going through all of this, or is that kind of the next step? You mentioned earlier that the hard work kind of starts with that. What's the timing of that, and how have you set up your firm to be able to really support your clients?
Yeah, so when I said the hard work starts now, it's almost like the easy part was we thought the hard part was actually getting a loan. Mm-hmm. And what actually has it really come to fruition is that was the easy part. And if we look at all the rules and all the regulation and everything that's happened since somebody's received funding on how you actually get to forgiveness, this is the difficult part. So what we've done from a business model standpoint, both in my old firm ACM and my new firm BDO, we have actually dedicated resources that spend all of their time on this activity. And what I mean by that, to put it into a practitioner's perspective, we have state and local tax experts. We have experts on GAAP. We have experts on international taxation. We've got to capture experts in PPP, EIDL, forgiveness, the rules, the regulations, just like the other experts that we have in fields of our firms. And I think to really support the client base that we have, obviously everybody here is in this town hall, they're learning, they have a thirst for knowledge, they're gaining that experience, but you got to dedicate resources and create your state and local tax-like expert in this area that's special, so you can answer you have an individual or team that can answer the questions of the firm for its clients and all of these issues. And the AICPA's resources to allow you to do that really make it pretty efficient.
Yeah, Greg, what we're hearing across so many firms is that they either have task forces, they have someone dedicated, and business relief. I mean, we've talked in the past about client accounting services, clearly you have the audit and tax area. This business relief and adjustment of business model is almost going to become it has developed into a practice area. How are you managing the anxiety around, more business relief versus additional financing needs? How are you thinking through that with your clients?
Well, I kind of look at this as like Social Security. And we've talked about this, Eric, you and I. But the reality is, you can't count on a next version of PPP or business relief or whatever it looks like. We don't know what that will be. And I think we're optimistic that it will happen, but you've got to do scenario planning with and without. We don't know what the with is because we still don't have access to the knowledge of what a new round of business relief will be. But there are businesses that can't function and operate without it. They need scenario planning, cash flow modeling. And the way to deal with that anxiety is to help paint the scenario planning and paint the picture for the client so they can see this is how they can function, this is how they can operate, and this is how they can survive with the various scenarios that are going to be out there. It really runs deep into the firm's services because you're pulling together valuation specialists. It might be client accounting services individuals that are actually doing the finance and accounting records of the company, small businesses. But it's also true for large businesses. If you think about it, a large business does not have a department set up to manage and evaluate their PPP or business relief and EIDL activities. They're going to look to outside advisors to help. They're going to go through this they hope they go through this once in their life as a controller or CFO or in business and industry. Those of us that are in firms in public accounting are dealing with it multiple times for our clients. We have to take that knowledge, take that resource, and bring it to bear for all the constituents that we serve and set a business up to allow that to happen.
Well, great. Lisa, I don't know if there's one final question before we move on to the next section here that you want to ask Greg.
You have.
We got you muted.
Nope, I'm unmuted. What advice do you have for small firms? And if you've got a very small office with just a few people in it, how can you keep up with everything that's going on and communicate that out to your client?
Yeah, that's a great question. I can answer your question on mute actually easier than I can when you ask the question. But I was in a relatively small firm, and we made a concerted effort to take our one advisory partner and have that individual be the key person that became learned in all of this information. And I can tell you that most of that learning took place by participating in these town halls and making sure we stay on top of all of the publications that are coming out from the AICPA. If you participate in these town halls, if you read the information that's coming out in CPA Daily, if you read the information that's coming out with the PCPS alerts, and then you repurpose them and redistribute them, we basically were taking what you all produced and we were repurposing and redistributing it to all of our clients through LinkedIn, through email, and then we provided an email address for them to come back to us with questions, and then we would follow up and figure them out and reach out to you and others to get that support. So you can be a smaller firm and still have access to resources to solving this problem for your clients with the resources you're all providing.
Well, Greg, thanks. Excellent insights. Thanks for your leadership. And we look forward to coming back to you in a couple of minutes when we take some of the open forum questions.
Sure.
One way that, and you can throw the slides back up, one key thing that the AICPA is thinking about are tools. We've built the calculators, we've got the resource center. We've also now partnered with a fintech partner, Biz2Credit, and we've built out this forgiveness tool. And we're going to do an in-depth review of it next week. We'll do some of the normal reviews that we do every week in the town hall, but we'll probably spend at least 30 minutes because we've been asked to do that, doing an in-depth review of what is this PPP forgiveness tool. And this base tool, we're thinking about it for the forgiveness process, and it's got all kinds of capabilities of uploading the source documents, filling out the 3508 or 3508 EZ, and producing a zip file with electronic signature from your client that you could then put in your file or distribute to the bank. But we're thinking about this tool not just related to the forgiveness process, but also related to a potential PPP2 application. When that does come out, and we think there's a chance it's going to come out in the next couple of weeks, everything's going to occur at a very fast rate, and there may only be 135 billion available. We want to be ready to support you and to have you be ready to support your clients with an option. Their original bank may be an option, but you might want to have a plan B to get that application in. So more about that next week. This is a standing slide we just put in the deck. It is about all the different relief options. You heard Dan Knoll talking a little bit about the Main Street lending program. We think there's going to be some increased activity there due to that SEC ruling on accounting treatment. I do want to mention .CPA again this week. We had a lot of questions last week. This initiative is very, very significant. We're very excited that we are launching this new restricted domain. Basically, we now have .CPA as a root on the internet. That is very, very significant. We're in this early application phase. And during this phase, which started September 1st and goes to October 31st, you can protect your existing digital URL in the .com in .CPA. So you will be able to reserve your .com URL if you are a licensed firm in this new .CPA domain. We have a list of the top questions at domains.cpa. Some of the top questions are related to pricing. We've been able to keep this pricing below other professional restricted domains such as .bank and .pharmacy, which are around $900 a year. This is $225 a year. It's got a number of advantages over .com, which I'll just mention real briefly in a minute. This is the value framework of what the .cpa restricted domain is all about. It's going to offer much greater security for you in your communications with your clients. It's a trust building opportunity. This is where the internet's evolving to. This is kind of Internet 2.0, and it's great that the CPA profession is taking a leadership role. And there's lots of other leading entities such as .chase, .apple, .kpmg. The list is long of entities that have gone to these new top-level domains that have controls in place. And it's also a great branding opportunity. Here's a simple chart. Lisa showed you a lot of charts earlier. Here's a chart just highlighting the differences between a .cpa domain and the .com domain. There are no controls, no monitoring that's really going on in .com. It's much easier to have spoofing and phishing attacks. Those are instances where somebody does an imitation of your URL and tries to request funds to be transferred, and this happens all the time. There's an increasing amount of these due to the fact that we're all now living in this remote environment, and many times teams are separate. So there's a greater chance of risk related to some fraudulent transaction. So these restricted domains are putting together capabilities that will make that much more difficult. Once again, more information at domains.cpa, and I just encourage you to take advantage of this early application phase, which will allow you to protect your existing .com digital brand. And right now, the interest is high. About 50%, close to 50% of the larger firms, top 500 firms in the U.S. have already registered a URL. Thousands of firms of all sizes are in the process of registering .cpa domains. So take advantage of this opportunity to reserve your domain during this early phase. So Lisa, with that, let's bring everybody back up. We can just go to the magic squares, drop the PowerPoint. Thank you. Hope everybody's enjoying our modern platform here. Lisa, somebody said in the Q&A here that we look like the Brady Bunch. I don't know who they're talking about. Maybe Dan. So Lisa, why don't you give us a couple of the top questions that are coming in?
Can I address my favorite question first? We've got someone who has asked if they can share this webcast with their staff for additional training, and how would they do that? So that's, yes, the answer is absolutely. Please share this. The archives are available either late tonight or tomorrow morning, and you can find them through the AICPA.org/SBA page. We put a link to the recording at the top of the SBA resource page. Dan, I'm going to ask you an accounting question. We got a question about the different models that you presented and whether or not there are rules about when to choose the grant model versus one of the other models. Can you give us any insights on that?
Yeah, I assume that means from the PPP borrower perspective.
Yes.
And so there is one very clear free choice, and that is, even if it looks like the most beautiful grant in the history of the world, you can treat it as a loan. So you could always, no matter what, choose to treat it as a loan because the SBA structured it that way. Now, as far as whether grant accounting is a choice, not quite, but it's not that far removed. You basically just have to have the expectation that the loan will be forgiven. And many entities legitimately will have that expectation and can go right into grant accounting. And I'm aware of at least a couple of circumstances where an entity borrowed the money, but they knew they were not going to qualify for forgiveness, but they couldn't pass up the low rate. And so, they were in survival mode. They would not be the candidate to take grant accounting. That would have been flat out wrong.
Thanks, Dan. We've gotten several questions in the Q&A back to my Brady Bunch chart where I prorated compensation because the Brady Bunch decided to apply at week 12 of their 24-week cover period. And some questions about where I got where I made my decision on that. Basically, that is as a result of the conversation that we had with our Treasury official late last week. It was confirmed in our lender and payroll provider conversations today that the SBA is also providing that information to lenders in terms of how to calculate compensation limits when a borrower is applying in the middle of a conversation. Don't know how far you want to go on questions, Eric, but
there's lots of questions. I mean, there's one here that just came in. What if a very small percentage of the loan won't be forgiven? Can we still use grant accounting, Dan?
If a small percentage of the loan won't be forgiven, that raises doubt into whether it really is a grant. So one of the open questions that folks have not necessarily resolved and come to conclusion on is whether you can split the baby up. And so what I would say, and this is just my opinion, I'm not telling you this is GAAP or doing something else is not GAAP. But if you're going to get into some aspect of this where it's not grant accounting, then just stay in loan accounting. And again, if you're a private entity, talk to your banker. Say we might have a debt covenant violation here, but guess what? We understand the substance of this.
It's a great point about those debt covenants. Thanks, Dan.
Well, I mean, Lisa, I'll let you look. That's when I'm looking down. Lisa and I are both looking at the questions that are coming in. A couple of questions on .cpa. Will you be able to redirect your old .com URL? Absolutely. And there's a process here. It's interesting. I've been talking to a lot of firms about this. Just like when you move your physical address, there's a process. You need to contact the post office. When you move your digital address, there is a process, and there's a process where you can inform Google that you're moving that, so you can maintain your SEO equity. And there actually is a process at the start. When you get your new .cpa domain, you'll redirect it to your existing website, and then over time, as you move to the new .cpa domain, you'll redirect your old website to that. And we've got all of that information on domains.cpa. So Lisa, maybe one more question before we wrap up and just review some of our standard resources.
Yeah, we got some questions about our lenders accepting forgiveness applications yet. Is the SBA processing any lender forgiveness applications yet? Eric, do you want to take that one?
Yeah, I mean, that's a great question. I mean, the SBA, yes, the answer is they are processing. The SBA actually has 60 days to process the application. There is some discussion on that. So this is, in some ways, there's another kind of a accounting element to that question. So if to get it off your books, there's that 60-day window. And at this stage right now, under 100,000 applications have been submitted into the SBA systems, and banks are just beginning to stand up their applications. And there was over 4 million loans, so just a very, very small percentage of loans have been submitted so far.
All right. Still lots of questions about automatic forgiveness, what the number is it going to happen? But the number that we're hearing of is still 150,000 or below. So
that's right. And I think right now, what everyone is most focused on getting PPP2. Even though, as Greg said, you be ready with other options, but get some additional business relief passed over the next couple of weeks. It's a very difficult climate in Washington, D.C., but there's a lot of bipartisan support. So, put your energy behind getting your local representatives to get a PPP2 bill passed. Then I think they're thinking about the automatic forgiveness. Then I think probably next is the deductibility issue, because we have time on the deductibility issue. So potentially in one of the next town halls coming up, we are going to have another representative from Congress, and we'll do a 30-minute session on where we see things standing. So at this moment, I'll thank Greg again. Greg, it's great to have you with us. Thanks for your leadership and all that you do, and we look forward to having you on a future town hall. And Sue and Dan and Lisa, thank you as well. So just moving now to the slides. Here's our resource center that Lisa highlighted, and it is probably the most frequented page on AICPA.org. So it's AICPA.org/SBA. Lisa, I know you just went off camera, but I was going to let you comment on this new IFR tool that you have.
Absolutely. And a really quick comment, the AICPA loan forgiveness calculator that you all know and love has been updated to reflect the guidance from Treasury on prorating compensation if you apply early. So new version of the loan forgiveness calculator is on our site. This is the searchable index of all of the IFRs and FAQs where we've listed out the topic so that if you've got a particular question and you can't remember where the answer came from, just do a quick search and it'll give you the link to the official guidance.
Thanks, Lisa. So with that, I'm just going to remind you that next week we'll have, we're calling it a special edition, but we will be covering some of the latest guidance, as well as doing a deep dive on this PPP forgiveness tool, spending about 30 minutes on it. So that is going to be at 3 p.m. Next Thursday, the usual time. Stay tuned on our LinkedIn and Twitter accounts. We greatly appreciate this time with you. Thank you for all your questions and all of your engagement. We hope you have a good end of this week, and we hopefully look forward to seeing you next Thursday. A reminder again, all of these town halls are available in archive fashion. We're posting them both to YouTube, the YouTube TV, AICPA TV station, the AICPA TV site on .org, and you absolutely can forward them to others to view. Thank you very much and have a good day.